David Daly, welcome to the show.
Thank you very much. Glad to be here.
So we are talking about kind of the biggest subject probably in the UAE at the moment with regards to business, something that will affect all consumers and certainly a large portion of the people listening to the show that are in the business community, which is VAT, which is officially launching in the UAE on which date?
On the 1st of January next year. I would say actually it'll affect businesses and entities more generally, because VAT is not primarily about a trading profitable business. The fact that you're trading at all, whether there's a profit motive or not, still means that VAT might apply to you.
And that's not the case in a lot of countries where VAT is already established, right? Like the UK, like there's certain companies don't have to charge VAT, whereas it looks like here there's some very clear financial categorizations that require a business to charge VAT. So maybe you can kind of give us the high level on what that is.
Okay, so the key thing to take into account is when you often read about things being zero rated or exempted from VAT, they're two different things, but people use them interchangeably. So for example, if you're exporting goods, 0% VAT is charged. So if I invoice you 100, you're in Germany, you'll receive an invoice 100, VAT 0. Okay, that's not exempted. Exempted means VAT doesn't apply at all. And that's a huge, huge difference. Because if VAT doesn't apply at all, you cannot claim VAT on invoices that are charged to you by your suppliers.
Right.
Whereas if you're in a zero rate or a standard rate environment, you can. They're two completely different things.
Now that applies to the business itself
Yes.
as opposed to the transaction. So if your business is VAT exempt, that means you don't get charged VAT coming in and you don't charge VAT going out.
Oh no, you get charged VAT coming in, you just can't claim it. And the key one in the UAE is residences. So your landlord cannot charge you VAT, and when he gets his maintenance bills for the upkeep of the building, he will be charged VAT, but he will not be able to claim it.
Naturally, that begs the question then, if you're living in a residential situation here in UAE, how does the landlord eat that margin, or how does that expose tenants here in the UAE?
Well, luckily at the moment it's a soft market. We know through the wider press that rents have been coming down. I think you'll just see that rents mightn't go down as fast as they were trending as the 5% gets absorbed into that. But in terms of its downward movement, that looks like it's going to continue for some time.
Okay, well, thinking about specifically the business community, if I'm a CEO of a small, medium, large organization currently registered in the UAE, how high should VAT be in terms of my priority stack?
Number one. The thing with VAT is most people consider it to be about accounting. It's not. VAT has accounting elements. It also has got operational elements, legal elements, HR elements, strategic elements, etc. It's effectively a set of rules. So what you need to do is you need to look at your processes. How do you operate, both from a trading perspective and back of house? And you look at those and you go, where does VAT impact in each one of those? And then you design a solution which takes into account those rules, you apply them, you correctly look after your paperwork related to that, and you pay over any monies you are liable to the Federal Tax Authority on probably a quarterly basis. And if you do not, when the audit comes along and they find you are in breach of one or more VAT rules, you will likely get penalised for each one. It's an expensive set of mistakes to make.
Well, I'm sure a lot of people are wondering about what the impact of the consequences are. Talk us through the consequences of not getting this right. You said when the audit comes along. Is it a when or is it an if?
It's a win. The early audits will be risk-based audits. So the Federal Tax Authority, or FTA, will look at industries where there's a high risk of error or malfeasance. These are typically cash-rich transactional environments where things could go unrecorded. You've got to remember that VAT has been around for a very long time, and VAT fraud has been around the same time with it. So, as we all know, there's nothing much new in the world, and the same applies to the VAT fraud book. The authorities here have had the advantage of looking over the history of VAT fraud globally, and they will know what they're looking for.
And you made an incredible point in one of your national articles, which is that you have to obviously consider in the UAE who it is that you're actually taking money from. It's a sovereign fund, right?
Yes.
So the consequences must be reflective of the fact that you as a business person are trying to directly fraud a sovereign fund. So what are some of the consequences that you're aware of for people trying to skirt around this tax issue?
Yeah, if you get caught evading VAT, that's a criminal offence.
And just describe evading real quick.
Evading means I should charge you VAT for a transaction. I don't. Or I give you a fake invoice and don't record it. And I don't pay over that VAT that I've charged you to the government. Fundamentally, let's put it in a Dubai perspective, because that's where we're sitting. You are effectively stealing money from Sheikh Mohammed, and I wish you well if you think you're going to get away with that. The penalties for it are up to 500% of the VAT defrauded, plus interest from the date of the infraction, and plus the potential of jail time.
So pretty severe.
Yes, very.
So then, I've spoke to people about the fact that we're going to do this interview, and the kind of man on the street view is, we've got this kind of great city. Everything is, the infrastructure is, amazing here. There's a lot of people that live in Dubai that already can't imagine themselves living anywhere else. So they're asking, what's the VAT charge for? Where is this money going? And actually, maybe you can explain it to me in the context of, or maybe you can actually explain it to the listeners in the context of, where does VAT fit in the maturation of the city or the maturation of the country?
Okay, so if you go back to the 1980s when Dubai, Abu Dhabi were towns really, and they used the oil and gas which were discovered here to develop the country, to build the infrastructure that we have, which is world class. It's fantastic. You eventually get to a point in the natural economic progression of a country where tax starts to come in, where the people in country have got to start making a contribution to the infrastructure that they get to enjoy for free. So 5% VAT, that's not a lot of money, although the international average is about 19.5. You will see VAT, I imagine, over the next 5 to 7 years start to move to that kind of level. Although that will require agreement from all members of the GCC to do that. Once you get VAT to a mature level, I would suggest you're going to get a corporation tax after that. It is in the UAE already on the statute books, it's just not enforced. And then following that, probably another 5 to 7 years, you'll see income tax. And that is not something anybody should be scared of. That is part of the natural progression or economic development of the country, which gives it the funds to invest in further infrastructure projects, which we all get to enjoy.
So you're one of a very few, relatively speaking, highly talented, skilled people on this subject matter. Tell us a little bit about where you came from and what's given you this, authoritative position, because you're a published author on this in the national press. Like, where have you come from, and what is it that gives you the right over this opinion, I guess? Okay.
I've got a commercial background. I'm a qualified accountant out of the UK, and I've typically worked in transformative environments. I've had to build finance functions from scratch, and that includes building for VAT environments, ensuring that we're compliant. And I've been on the receiving end of VAT audits back in the UK. I once got told to pay back £86,000 by the VAT man who pulled a rule on me I didn't know about. It's a bit of a technical point, but where you have invoices for more than 2 reporting periods on your payables ledger that you haven't settled, in the UK you've got to hand that VAT which you'd reclaim back to the VAT man. I didn't know about it. And the expression on my face told the VAT man that I wasn't lying to him. So he didn't fine me, because I obviously wasn't trying to pull a fast one. Yeah. I did have to pay interest, but there you go. VAT's also dynamic. I knew what I knew. I didn't realize there had been a rule change, and this country is going to be no different. There will be rule changes. So even if you're compliant today, you got to keep your eye on what changes are going on via Federal Tax Authority edicts that they release, and court cases, and there will be plenty of them.
And so your clients that you work with obviously know your background. Tell me about your clients, and what are kind of the top 3 or 4 questions they're coming to you with right now, saying, David, that's moments away now, and certainly there'll be people listening to this interview from 2018 onwards, maybe for the first time. What are some of the first knee-jerk questions that you get hit with from the business community?
There's probably 2 key ones. First of all, there's a fear of how much it's going to cost. And that's understandable, because they've got nothing to compare it to. This is completely new. Nobody knows how to price it. Sorry, that's unfair. The consultants do. But from a client point of view, they haven't had to do this before. So they've got nobody they can call and go, what did it cost you? They're aware that there is a complete shortage of VAT skills in country. We're in a country where if you look to the finance profession for your solution, the vast bulk of accountants are either Indian, Pakistani, Lebanese, and after that Westerners. Pakistan has never had VAT. India just got it in July. Lebanon has had it since 2002. But a lot of those people would have been in the UAE maybe for 10 plus years and mightn't have a lot of experience. And the same can apply to Westerners. So, Western expats. So you have a shortage within the talent pool. Are there entities out there selling services who don't know what they're doing? Yeah, there are. Caveat emptor, let the buyer beware, but that's always going to be the case. You need to do your due diligence. You're the buyer, you're looking for a solution. You've got to make sure the people who you're bringing on board know what they're doing. That's one element of it. The other element of it is they're trying to understand how granular VAT is. For a lot of people, it's, well, I get charged 5% and I charge 5%, isn't that it? And, well, no, it's not. VAT is a lot more complex. Just to give you an example, there will be VAT on ATM fees. So you bank with one bank and you use another bank's ATM, you get charged a dirham, there's VAT. It's a fee. There are fees everywhere. And when you actually start to sit down and think about it, it's quite shocking where the fees are. And you then get into the additional complications of trading in different jurisdictions. So think about an e-commerce business that is trading in, say, Saudi, or let's say Saudi, because that's going to be the only other one live on January 1. Once you up to $100,000 of business, you will charge UAE VAT. After $100,000, you will have to register for VAT in Saudi. That doesn't mean you need an entity, but you can register for VAT, and then you start charging Saudi VAT and start doing Saudi VAT returns. The fun for that, the bigger part of fun, which people don't see at this stage, is the operational aspect. When the audit for the Saudi authorities comes, they're not getting on an airplane and packing their bags and coming over and staying in the Burj Al Arab to come and check your books. You're going to get all your books, put them on a plane and fly over to them. And they got to be in Saudi and Arabic. So if you've been keeping everything in English, you now need to translate them and get them notarized. That's a lot of paper.
Wow.
And that's just one aspect. You can go through sector after sector and there's story after story. I've written nearly 24 articles, and I usually try and find something like this just to highlight the point of how complicated it is.
One point that I loved in your talk at the Bureau a few days ago when we first met was the point that you made about bartering.
Yep. Please
expand a little bit on how VAT will impact bartering, because especially a lot of service-based organizations might barter, come and do this for us and we'll give you a free this, and it's kind of just all done.
Absolutely.
A lot of it's done off the record, in fact.
Oh, absolutely, and that's illegal.
Yeah.
So that's tax evasion. Welcome to prison.
Yeah.
So I'll give you a bottle of water for your biro.
Yeah.
And we swap them. Happy days. What we actually should do is we should assign values. So if the value was 10 dirham, I would give you an invoice for 10 dirham plus VAT, and you would give me an invoice for 10 dirham plus VAT. You can barter, but you've got to assign a value to that barter deal, and then from a paperwork perspective, deal with the VAT element of it.
So barters can still happen?
It's they can. I wouldn't. I think it's better just to raise an invoice.
No, of course, but what I'm saying is it's a barter, but it's a formal barter.
It's a formal barter.
So for example, if you're doing a video shoot that has no tangible number attached to it, and in return you're getting catering on that shoot.
So what you would do is raise an invoice.
100 tacos would be, raised at 1,000 dirhams. The video shoot would be raised at 1,000 dirhams. You would exchange the paperwork so that the government, there's transparency and they're aware of what's going on.
And what you would then do is you could pay each other's bill at the same time, and you're completely compliant.
Would you need to pay each other's bill though, if the value is?
Technically, yes, because if it's not paid, at some point you'd have to write it off as a bad debt.
Got you. Wow.
So, I mean, you could do a cash.
Could you issue a credit note?
You could do a cash transaction. So basically, I hand you cash, you hand it back to me. Done. And you just sign receipts.
Okay. So it's really important to know, though, David. Like, there's a lot of people that are gonna need that information. Like,
yeah, and you got to have proof. So you would sign, going, I received X amount of cash, and the other side of the transaction would say the same. And you know what? Even if the 1,000 dirham didn't pass back and forward in the hands, both sides have agreed that there was a value transaction with VAT. And the reality is both sides of that transaction would probably be registered for VAT and would reclaim it in any case.
Of course.
So it's only a cash movement. So people shouldn't be scared of it.
Right. People just have to be sensible.
Yes. That's it.
Got it. Now, tell me, let's talk about some specific industries. How is this going to impact the hotel industry, hospitality, travel and tourism? Because that makes up a significant part of the country's GDP. And I'm sure that the CEOs, owners, investors, operators that are active across the region and maybe even have global HQs and entities outside the region are wondering how that's going to affect the business and the consumer trends. So maybe you can speak on both of those.
Okay. 5% VAT in the grand scheme of things internationally is not a huge amount of money. We have in this country a very broad set of offerings, so I don't think that's the issue. The bigger issue will come in the MICE sector, basically our World Trade Center and all our exhibitions. These people who travel a lot internationally are used to arriving in and are used to being able to reclaim their VAT on the way out. Now, because it's only 5%, there's no commercial basis to set up a business to manage that for tourists. And at this stage, unless something changes in the executive regulations, I'll talk about that later, it's likely that they're not going to be able to reclaim it. So there might be a small effect in the MICE sector. I wouldn't imagine it'll be a lot. Where the UAE is an unusual place is...
Wait, now, can we just break that down a little bit? So if you come to Dubai and you rent a conference facility, you'll pay VAT on it.
Absolutely.
But on the way back out, you won't be able to claim it back out the way that a foreign entity would be able to if it was to
not
go.
for the conference facility, for the hotel rooms. So typically what you'll find is if people come in to the UAE and buy goods, they typically claim the VAT on the way out. So if you went to London and you bought goods, you claim the VAT on the way out.
Yeah.
Not on the hotels, but on just general
A laptop,
purchases.
for example. Yeah.
Yeah. So because it's only 5%, it's kind of unmanageable. Because typically what would happen is a third party would manage that process with the VAT authorities. Now, until our VAT hits those kind of levels, then you're not going to... I can't see how the government can justify having a refund scheme. I think that will come in time. It's low enough, you'd hope that it shouldn't affect. The issue in country on the hotel side is on the municipality fees. In certain Emirates, the municipality fee is charged to the hotel. In other Emirates, it's charged to the guest. And my understanding is where it's charged to the hotel, VAT will be applied. So there'll be an additional charge to the guest. But where it's charged to the guest, there'll be no VAT.
Because the guest is a foreign purchaser?
No, that's just the rules. So what you already have is, I know that sounds a bit odd, you've now got 2 different applications for the same rule in the same country, depending on what emirate you're in. And we haven't had a court case yet. Okay, that's VAT. And once the court cases start, that's when it's really going to become interesting. I can't see us having emirate-specific court cases because it is a federal level tax. That's not likely to happen. But you are going to have potentially more divergence in VAT treatment within the 6 countries of the GCC. And if you're trading across those 6 countries, you've got to be conscious of the rules as you trade between them.
Where does VAT sit in then, specifically talking about the food and beverage entrepreneurs and businesses and hoteliers, where does VAT sit in the context of the other new taxes that are being launched at the moment, like the sin tax? And, you know, for those who are not aware, there are now going to be some premium taxes added on top of shisha tobacco, energy drinks, classically sugar-based drinks like the sodas.
Yeah, so it's 100% on any tobacco, 100% on energy drinks, there's a certain definition for that, and 100% on, 50% on carbonated drinks, with the exception of mineral water.
Okay.
And that's soft drinks, by the way, only.
Yeah.
So their sin taxes...
So you add those up and then you plus 5% on top?
Absolutely. VAT sits on top of every tax. So once you've added everything else up, then you slap VAT on top.
Got you. Cabs?
No. Local transportation is being left outside VAT.
So the public cab, the metro.
Yeah.
What about Uber and Careem?
I actually don't know, to be honest with you. The definition in the law suggests that they also would be outside it. But I would personally prefer to wait and see what the exec regulations say. And the reason I say that is just thinking about education. The VAT law talks about state-provided education from nursery to tertiary being VAT at 0%. It doesn't actually talk about private at all. Our understanding is primary and secondary will be zero rated. That could change, but that's our understanding. But we are unsure at this point of what would happen to nursery and tertiary. And tertiary is the more difficult one in truth because of the nature of adult colleges.
Yeah. One point that you made the other day that was quite good that you just touched on there. I mean, I enjoyed, listen, let me just say, I enjoyed pretty much everything that you said in your talk.
Thank you very
It was
much.
incredible. But you also talked about zero rated VAT, VAT exempt. That was a concept that I was not particularly familiar with, although I'm sure my accountant is. Can you just explain that to people in terms of categorizations real quick?
Okay, so let's give an example of each. So let's think about your secondary school where your kids go. You get your fees, say 30,000 a term, and it will have a line that says VAT 0% 0. Okay. In the school's case, the school will charge 0% VAT, and on its costs, when it receives invoices for DIWA in Dubai, etc., VAT will be levied, and they will reclaim that VAT. In the case of residences, which are exempt, your landlord will issue you an invoice and it won't even mention VAT because it is outside the scope of VAT. However, when the landlord gets an invoice for maintenance, VAT will be charged at a standard rate of 5% and he will not be able to reclaim it.
So did you just talk about two different scenarios there?
Yes. So an exempt
0%,
environment
yeah,
and a zero rate environment.
So you had a great example when it came to that as pertains to the free zones and the
free
coffee
zones.
purchasing.
Yeah.
So firstly, for free zones, there's a lot of people that are registered in free zones, right? Technically, that's considered offshore, so one would assume that there's no VAT on that, but we know that that's not the case.
We believe it's not the case. The VAT law talks about designated zones, Articles 50 to 52. And a designated zone, as I've heard defined, is a control zone. So think about JAFSA, where there's this guy on the gate. He sends you to a hut where you hand in your ID card, you get a little token, and on the way out they may check your car. That's a controlled environment. If we then think about conventional free zones like Media City, Silicon Oasis, etc., easy come, easy go, anybody can go in and out any way they like. The difference in status for companies there is they don't need to have an Emirati sponsor. And the question arises, well, will VAT apply to what are called free zones? And I don't believe they will. And I got to go through 4 examples. It's going to take a little bit of time.
Sure.
So let's start with our coffee shop in Knowledge Village with one across the road on shore.
Okay, so Knowledge Village, offshore, free zone.
Yep.
Coffee shop A.
Absolutely. Coffee shop A. Same coffee shop across the road from one another. And let's assume that all free zones, regardless of where they are outside the VAT net. What will happen is, as a coffee consumer, I will go into the coffee shop in Knowledge Village and I'll buy my coffee because it's 5% cheaper. The coffee shop across the road, same chain, will shut down because there'll be no business. The man who owns that building will be absolutely livid because he won't be able to get any tenants. Why would you bother? You would set up across the road. So that's not going to happen. The second scenario is that they apply VAT to all retail businesses across the country, regardless of whether they're in a free zone or not. Where that comes unstuck is the coffee is now the same price, but the business upstairs from the coffee in the free zone who wants to buy a computer will go to the computer shop, will not go to the computer shop downstairs, it will go to the computer shop across the road. It will buy it there and it will have it effectively exported into the free zone without VAT. So we've gone from onshore customers going offshore to get coffee to offshore entities going onshore to get supplies. It's just impractical. They're not going to do that either. It doesn't make any sense. Option 3, they fence them all. So you can imagine the walls start going up around Media City, Internet City, Barsha Heights. I mean, bits of that are in free zones. It'd be a mess. There'd be no transport system for about 4 or 5 years while they build roads and bridges. So they're not going to do that either. What they'll end up doing, I believe, is if it's already fenced, like JAFSA, DAFSA, they will apply to become a designated zone and they will be outside the VAT net. There may be small pockets of them internally in the country. I don't know what the rules for that are going to be at this stage, or even if that's what they're definitely going to do, but that's the only logical solution that I can see, unless they come up with something spectacular, which none of us are expecting.
So kind of in closing, and what would you say is the overall right sentiment in terms of the way that we approach and think about VAT. It's a small amount. You know, you've said that a couple of times, but it's not the kind of thing that people should be kind of running around like headless chickens about. It's something that has been done in many other countries before. It's part of the natural evolution of, Dubai, and obviously the people now making a contribution to the wonderful infrastructure here, as you rightly mentioned. But if you could kind of like have an umbrella statement for how most business people should think about VAT moving forward, what would you say?
It's a chance for you to look at how you work, because VAT is a set of rules that apply to how you operate. Now is a chance for you to make sure you've got how you operate documented, front and back of house, how you trade and how you support that trade. And as part of applying the rules and making sure you're compliant, have a look at those protocols and see, do they still make sense? Are people doing the right things? Mm-hmm. So you have actually a chance to add efficiency into your business. You haven't got a lot of time left to become compliant, and the more complex your business, the longer it's going to take. But that is the real opportunity, is to become a more efficient organization by using this chance to look at how you work.
One of the things that you mentioned, though, in your talk, as pertains to what you just said, the auditing of your own business, mm-hmm. is there's going to be hyper transparency now with the government in terms of inbound transactions, outbound transactions. That will also then put some visibility on free zones that may trade with onshore, the categorization of your company. That's a lot of.
There's two key points here. Let's deal with the trading first, because I think that's the bigger one for a lot of people. We have seen a concession has already been given to DIFC, where in certain circumstances they can trade onshore. Mm-hmm. DAFSA, I believe in the last week, has announced the same. Mm-hmm. You apply and you get permission. Get down to the reason why these areas were set up in the first place. The UAE was trying to draw into their country, as part of their economic development plan, skill sets which would benefit everybody. Not everybody wanted to have a local sponsor. So they gave them an environment where they didn't need one, which would still bring the skills in. And what we are seeing, again, in the same way that VAT is part of the natural economic evolution of the country, the breakdown of those free zones, which are not really free zones in the international sense, where they're typically controlled environments. Mm. They are effectively offshore for all intents and purposes, is part of the UAE's natural development economically. So I think you're going to see that they will become more part of the mainstream as we move forward. And that should be welcomed. The second element is you have cases where children are on their parents' trade license, where they're, say, professionals in their own right, but the children are actually doing different activities which aren't covered under the trade license issued to the parent. That's illegal. And that could get caught as part of a VAT audit. Now, what the parent can do is apply to do additional activities to cover what their child is doing. So it is a manageable situation, because you are allowed a couple of activities under your trade license in most cases. How
will the rollout and the fines and things of that nature be different in 2018 than 2020? Is there any indication that there's going to be somewhat of a grace moving in period for VAT for year one?
The FTA has been very careful with its wording, and they have said it is not their purpose to go out and seek fines. That's how they've phrased it. Mm-hmm. There is a forecast of 13 billion in 2018 for VAT. That rises to 20 billion in 2019. So the inference is that the economy, ignoring fines, is going to grow by 40% in a year. That's not going to happen. So that money's coming from somewhere. Mm. I would expect, if we follow the Malaysian example, after 1 year, they did a lot of auditing. They audited 1/8 of all companies who were registered and found issues in a third of them.
Okay.
I don't think they're going to unfairly punish anybody. I don't think as a country that tends to happen here. But there will be fines, because people are going to do daft, stupid things because they didn't prepare properly. Mm. The biggest element of fines, I think, is going to be for those people who got poor solutions put in place, didn't really understand what it was that they just paid for, and they're not going to find out how poor a condition they are in for VAT until the audit happens. And this is the really frightening part for businesses. You got a solution in, you got somebody in, you got a good price, well done. And 2-3 years later, the FTA come along They audit you and you find out your solution is broken. So you've been trading in error for years, and you're going to get fined, you're going to pay interest, and everything is calculated back to the date of the infraction. So if you've started off on day one incorrectly, and for whatever reason you don't get audited for a few years, you have the accumulated errors. Now, do you go back to the people who put your solution in place, if they're still around? Or what are you going to do? And the sad reality for businesses is where they don't have that knowledge and they don't understand the solution that's been put in place, they're just not going to know how bad things are until it gets realized as part of an audit.
So is there a CEO's checklist right now, like that he or she should be thinking about? Like, listen, VAT is, depending on when you're listening to this podcast, is either around 90 days away, that's from when we're talking right now, or is already in place because, podcasts live forever.
Yeah.
What's the first thing that you should be thinking about reaching for in terms of making sure that you've got compliance? Because another thing from your talk, which was cool that I picked up on, which was that this is a self-assessment VAT submission, right? There's no system, and maybe you can talk a little bit about that, and also how one will actually engage with the government entities in terms of their submissions. I believe it's a non-human process.
Yeah, which is great. So first things first, VAT is a set of rules which you have to comply with. So you have to look at your operating procedures front and back of house, and you have to apply the rules to it, design a solution and implement it. It's then up to you to manage that on an ongoing basis, periodically report, maintain proof of why the results what they were, and pay. Okay? The taxman isn't not going to be involved in any form. You will then go onto the FTA website after posting your return and send money. Done. At some point they will come out and they will audit to make sure that you are in compliance, that you are keeping your records properly, you are reporting it correctly and in a timely manner. It is about you. You become, as a registered vendor for VAT purposes, a tax collector. Mabruk. And that's just the reality of it. Your second question was on,
Human interaction.
Human interaction. Okay, so one of the things I've enjoyed here in my 10 years in the UAE is you generally go to a government office, you bring somebody with you, they have a chat with somebody behind a desk, and you get an indication of what you should do. And if you've just moved here for the first time, the first thing you do is you say to your helper, can you get him to type it down, an email, a letter or whatever, and stamp it? And typically you'll be laughed at. So you just hope to God that the opinion doesn't change when you rely on it later. The FTA, I think, are doing an absolutely wonderful thing. There is going to be no offices. You will send emails. So therefore you are going to get back an email, which is something you can now rely on, which is a great thing. It'll take, I don't want to use the word wasta, but it'll take it'll take that kind of wink, wink, nudge, nudge, which might go on in a human interaction environment out, because there is now something which can be presented if it gets litigious. And that's good. That's good for the country.
That's a very good thing. In terms of, how long is it going to take for businesses, business people, business owners to kind of fully get their head around this?
You got to learn to live with it. So as part of your solution, when you're implementing that solution, that's when you do your training. And that is when you're starting to learn to live with VAT. So if you got a consultant in to support you at the point of implementation, in that phase of the project, you should be doing your training. There's a lot of training courses out there. They're generally a complete waste of money. Read my articles, read Wikipedia. You might as well, quite frankly. The issue with it is a training course or even an article as such is it teaches you certain things like driving a car. So you end up sitting in the car, you know where the key goes, you're not sure what it does. You know what the window wipers are, you're not really sure which handle does it, but you believe it's a handle because you read it somewhere. You know the wheels go forward, they might go back, you're not sure, you've heard a rumour about it. So you learn a lot of discrete facts, which in themselves make you dangerous, because you now think you know what you're doing. You haven't got a clue. Because it is a broad framework across everything you actually do. So training should not take place unless it's part of the implementation process. Outside training courses, once you're VAT live, that's when I think about sending people on VAT training courses. And at that point, you've got somebody internally or you've got a consultant who will look at the program and go, yeah, that's worth sending your fellas on. But people are spending a couple of $1,000s to spend 2 days in lovely hotels, drink tea and eat biscuits. And it's a horrendous waste of money. It really is.
Right.
Absolute scandal.
Well, listen, I super appreciate your time. What an incredible chat. Where are you on social media? You can give away any kind of contact details if anybody wants to reach out directly to you. And is there a repository of your writing? Is that on your website? Or I mean, tell us how we can contact you.
So we have a website, www.argentvat.com, ARGENTVAT.com. If you go on to the national newspaper's website, thenational.ae, and under search type in my name, David Daly, that's D-A-L-Y, all my articles will pop up. There's nearly 24 of them. You can contact me on david.daly@argentvat.com. And yeah, we'd be delighted to one of us to come out and see you. In terms of the people I work with, they're all very experienced ex-CFOs, FDs, and have worked in the real world with VAT. Yeah, you're dealing with people who have lived, set up, or helped people set up VAT environments in mature economies.
Super appreciate it. David Daly, thank you so much for taking time out to be on the show.
Thank you very much. Cheers.